Jeff, good afternoon.
Man, how are you?
How we doing?
Good afternoon. We're doing very well. I think we're doing very well. You've been talking about the markets all day. I think it's very well.
Yeah. I see a lot of green. I see a lot of red. So,
and you know what? We're talking about music today, and there's a lot of great things going on in music right now. So we'll talk about that a little bit later, I'm sure.
There's always good things going on in music, more so than the market.
Yeah. I agree.
Yeah.
A lot more fun anyway.
I'm with you on that. Before we get into that, do you have any thoughts on any of the developments since we last spoke 2 weeks ago on in the markets and public, private, whatever? There's been a lot since we last spoke. A family office nearly tanked, the entire U.S. market. Do you have any thought? We have an infrastructure thing today with Biden. Do you have any thought on any of that before we go into our theme of the day?
Yeah, I think that it's always good to kind of maybe follow up. Last time you and I were talking, Spencer, we were talking about, inflation. We've been hearing that daily now since, you and I came on live a couple of weeks ago, and I'm going to continue to, hold strong with the fact that I don't believe that thesis. I think that there's just way too much data points out there that would tell me that, it's much to do about nothing. And if you look at the U6 jobless rate, I mean, what is it right now? It's 11.6. Call me when it gets down to 8%, and I'll start to lay down my sword, right? I look at, capacity utilization rates are sitting at 74% right now. When it hits 80%, I'll start to, get a little bit more excited about, or maybe pay a little bit more attention to this. And remember, the median on that, or the expected, is 85%. So there's just too much going on right now, I think, that doesn't support this whole concern on inflation. That's just my humble opinion.
All right. That was enough wonky economic talk, I think, for one day. Let's go into the theme of the day. As I mentioned, investing in music streaming. So we've got a lot of companies in this space. It's pretty crowded, right? Maybe not to everyone, but there aren't a lot of names that come top of your head right off the bat, maybe besides Apple and Spotify. But it's a pretty crowded space, Jeff. Let's just start with this. What? Explain your exposure or your interest in music streaming, and sort of why we're even going into this particular topic today.
Yeah, so I think one of the things, Spencer, that this particular show is going to be interesting for our watchers and listeners. As you indicated earlier, I spent 21 years on Wall Street, and I left Wall Street to go into the private markets, and I did that for a reason. And the reason I did that is because I felt that there was a massive window of wealth creation that I could identify in the private markets, which will eventually make their way to the public markets. And because I had that experience, I felt that it gave me an edge in the private sector. So, I'm looking at themes in the public markets, which I think are going to be positive moving forward over the next 5-10 years. So, again, these aren't short-term trades. These are more long-term trades. And then what I do is I go into the private sector and I look for companies that I think can play a significant role in that, and either an acquisition by a major corporation that's already public, or a company that I think I can take public, either myself or through, the means of someone else. And so, music is something I've been a part of for a long time. I go all the way back to the days of Beats, which used to be run by a very dear friend of mine. CEO of Beats was a guy by the name of Jonas Temple. I've known Jonas my entire life. It's basically my brother for all practical purposes. And so I've been a part of music for a really long time. He was the founder of a private company called Beatport. So music has been something I've been focused on. And let's face it, when Apple came out of nowhere and beat the music industry down, it's been down there for a really long time. And then, these streaming platforms started coming online, and now music is really back in play. And I think that over the next 9 years, my personal opinion is I think that music streaming, and let's just call it the cobweb effect, right? Those companies that are sitting in the downstream of these organizations, we're going to see the streaming, I believe, double in the next 9 years.
Like, you mean like the TAM doubling?
Yeah, I think if you look at just the total addressable market is already there, but I'm saying capturing that and driving revenue. I think, if you look at live music, I think it could be somewhere, 38 to 40 billion. I think recorded music is going to be around 80 billion. And I think, music publishing, which is a big play right now, you're looking between, probably 12 to 15 billion. So from where it currently sits, those are all doubles.
Let's go. Let's maybe zoom out and can you break down for us the players in the space and who is impacting who's leading the way? What are the different areas of the market here?
So I think the best way to think about music, Spencer, is to break it into its components. So like you were just kind of saying, right? It's a three-legged stool with respect to the people who share the revenue. And one of those legs is going to be, the platforms. And that's going to be your Spotify, your Pandora, your Apple, et cetera, all the ones that we use on a daily basis, and we're very well known. The second leg are the owners or the publishers, the people that actually own the music that we're streaming on a daily basis. And as I said, I think it's a double, and I think you're going to see, you could see annual growth just in the publishing side of this thing is in the tune of 22% a year, I believe. The third leg of the stool is the artist. And we're going to talk a little bit about that today, because right now the artists or the individuals who perform the music or the individuals who are actually writing the music and creating it, they are the ones that are getting the least amount of revenue coming their way. And that's a theme right now that I'm really focused on. And I think it's going to be a significant thing moving forward. In fact, I know it is, because the owners of the music and the platforms of the music are already locking arms and saying, hey, how can we improve things to make sure that the revenue streams that need to get to these artists and songwriters get there? If you think about what's happened in this last year in 2020 with the pandemic, music streaming has definitely benefited, right? We were locked down. In fact, if you look at the statistics, the millennials and Gen Zs are spending more money on music on an annual basis than any other generation before it. The number, I think, is something like around $163 a year. And if you look at just what the average, American is spending on an average basis, it's $152. So, I think that it's definitely going, that third leg, which is the artist. These platforms, the owners and the platforms, they have to get more money down to these artists because they're not on stage anymore. And artists really today make the majority of their money when they're performing, and they haven't been able to do that for over a year. And the amount of money that they've had to give up in this last year, this 2020, is significant. And there's been a lot of pressure that's being put on the first two legs to get that done.
I just want to ask you, and I'm as guilty of this as anyone, but when you pound the table, as I also want to do, your mic picks it up. So try not to pound the table too hard when you're making your point, because I'm with you. No, I'm with you. Yeah. I'm into it, and I bang on the table, but I'm picking it up. So we can both try not to do that. Okay. So who are the biggest players then?
So on the platform side, the biggest players, I think the 1,000-pound gorilla on the platform is definitely Spotify. There's absolutely no question about that. You go about below that, you probably have Apple. Amazon, right now is the third biggest player on the platform side. And if we talk about Amazon on a daily basis on your show. In fact, your latest guest was talking about it. Amazon is not a company or a group of managers who actually likes to be number three in anything. So I think that they're definitely one of the players that we want to keep an eye on. They have a ton of money, as we know, so they can do a lot of acquisition and they can do a lot of interesting things in the space. So that's on the platform side. As far as the owners of the publishers go, Universal Music is the 1,000-pound gorilla by far. 69% of every single day's streaming comes from the library of Universal. In fact, it's so big that it is referred to as the frontline library. So underneath that is Sony, and underneath that is Warner. Warner comes in third, and Warner's making some really interesting moves. You might have seen it today. In fact, I'm not sure where it's sitting right now, Spencer, but earlier today it was up about almost 5% on some news that they have partnered with Tencent Music, which is China's largest player in music, and actually, quite frankly, the largest investor in music worldwide. But they made some announcements today which were really interesting, and Warner was up significantly, at least a little bit earlier today. Where's it sitting now? Yeah.
So Universal, in terms of just catalogs, right? Universal, Spotify, you said Universal, followed by Warner Media, and then Tencent was the last one.
Yeah, I was talking about Tencent. Now, Tencent, is a massive Chinese company. Tencent, is an interesting one, right? They own about 20% of Universal Music. They own about 9% of Spotify, and then they own 3 of the 4 largest music labels in China itself. And as I said, they're really, as a music investor, if you've got Tencent on the cap table, you pretty much are assured, you've got a winner.
I neglected to mention Sony, which is also in there, which you mentioned as well. Sony was on that of big players, the major stakeholders, as far as the music owners are concerned, right? Universal, Sony, Warner, and I guess platforms. We got Spotify, we got Apple. There are others though on your radar, right?
Yeah, there are, and what we're talking about right there, and I think another interesting thing that we should talk to our listeners about. Everything that you just got done saying on the platform, right? You talk about Spotify. Spotify is business to consumer. Apple's business to consumer. Amazon is business to consumer. And what that means, Spencer, is that music is broken down. Again, it's a 3-legged table. The first leg is the business to consumer, which we were just talking about. That allows you and I to consume music in our earphones, in our cars, in our boats. Anything that we're consuming from a personal perspective, that is a license that allows us to do that. And when we, sign up for Spotify in the small details, when we say we agree and sign it, that's what it's allowing us to do. Next to that, you have what's called sync. And what sync licensing is if you are using music to create a sonic image. For example, if you're trying to create a commercial, if you're doing YouTube videos, if you are using music in a movie or a series, you have to pay the licensing of what's referred to as sync. The third leg is the business to business license. And that's one that I'm really heavily leaning into right now myself. In the past year, we've invested over $25 million in the B2B licensing leg. And that is any business environment that's using music as an atmosphere driver, as a sonic image, as a mood enhancer. If you walk into a restaurant, if you go into a shopping mall, whatever it might be that's playing music and it's a business environment, they have to pay the licensing of B2B, which is different than sync and it's different than B2C.
Well, why is that your area of focus?
I just think it has the most room to grow. Just like when we started off our show, we started talking about the obvious, right? We were talking about Spotify, we were talking about Apple, we were talking about all the things that are obvious, and it's all B2C. And really in the past, that's really been the focus. But now, I was talking about getting more revenue down to the artist. And so what you're starting to see now is the rights holders who have an obligation to those artists to make sure that they're getting paid in all the different environments that their music is being utilized. And the B2B space has been ignored for a long time. And I believe that is absolutely changing right now. And it's the biggest growth. I mean, if you look at it, the addressable target or the addressable market of the B2B is no different than it is in the B2C. And it's just getting started. So, as a venture capitalist, as someone who is really looking for a lot of growth, I want to invest in something that has a tremendous amount, let's just call it exponential growth, because that's what it is.
I'm not thinking of any names off the top of my head that, like, in the B2B leg, I guess, if you want to call it that. Like, what companies are you thinking of that do this?
Well, and that's exactly my point, right? It's hard to come up with those names. So right now, I'm investing in a private company called Soundtrack Your Brand. Used to be called Spotify for Business, ironically. So it was a part of Spotify. And we rolled it out of Spotify about 2 years ago and created it its own brand and its own image for economic reasons. Really, when we were doing our negotiating with the rights holders, right? Because if you think about the platform, all we're doing is using the rights holders, those publishers' music, to create a business, right? And so what we wanted to do is create its own brand, because when we were negotiating with these rights holders, they kept thinking about us in the form of Spotify. And Spotify is just so big, and Spotify already has its agreed to economics. So let me just give you a little bit of an example of the difference between a B2C space and the B2B space. And again, Spencer, the addressable market is damn near the same. So let's just use Spotify, for example. So Spotify, 47% of all of their subscribers pay them, 47%. And of those people who are paying them, they're paying them $9.99 a month. And then Spotify will take 27 cents of that to the bottom line. That's the B2C space. And again, they're the 1,000-pound gorilla, and they have the best economics. In the B2B space, or for example, Soundtrack Your Brand, 100% of Soundtrack Your Brand's customers pay them. Of that, they pay $35 to $55 per month. And then Soundtrack Your Brand takes 50% of that to the bottom line. And it's just getting going. And the rights holders are now working with the B2C platforms and the B2B platforms to make sure that customers or consumers that are using those licenses in a business environment are properly licensing them. And they're working together because they have a contractual obligation, and quite frankly, just, the right thing to do for the artists to make sure that those artists are getting paid in all those different environments.
So what is to stop a company like Spotify, for example, from using the B2C as like the umbrella, get you in the umbrella, and then and establishing more of a B2B operation? Or do they already have that?
No, they don't. They used to. So Soundtrack Your Brand used to be their business to business.
It was
platform. It was actually Spotify for Business.
Okay. I thought, I didn't know if the name, if you just like called it that, but it was actually with Spotify. Okay.
Yeah, it was actually Spotify. So, and it's a great question. And it's actually an insight from a private investor, a VC, to think about. So there's this third thing that's going on right now, which I think is really interesting. And I think it's actually proof source to our conversation today, Spencer. If you pull up Spotify, my guess is it's going to be up around 4%, maybe a little bit more. And it's up today because of news that they purchased a company called Betty Labs. And this is just proof source to what you and I are talking about, this whole space of music. And again, the companies that are the downstream of these things. So what Spotify is doing is they're focusing on this notion of audio. It's no longer just about music streaming. You're not going to hear Spotify really talk about music streaming anymore. You're going to hear Spotify talk about this audio experience. And if you start to see what Spotify is doing from a strategic perspective, think Joe Rogan and podcast. I mean, 2 years ago, you would never have thought that if you wanted to watch or listen to a podcast, that you'd be going to Spotify. But today you have the biggest, names inside of Spotify today. And with the Betty Labs, and what they did there with Locker Room, I think it's super interesting. And again, it's proof source to what you and I are talking about right now. They are going to continue to acquire companies in this audio space that continues to build this value prop for their customers, which is going to drive more and more people to that space. And again, just real quickly, if we jump over the fence to the B2B side, it is in fact this global audio business experience. And you can start to think about all the things that a Soundtrack Your Brand will eventually start doing themselves. So let's think the old days, like radio, right? Businesses would pay radio stations thousands of dollars on a monthly basis for these radio ads. And radio's kind of gone to the side. But what if I was a business and I could go to a Soundtrack Your Brand, for example, and go into their studio and lay down an advertisement that I wanted to have play 5 or 6 times during the day in my lobby, and then go and just grab the music that I want to use to drive that sonic image and that energy level around it, just be able to do that. I mean, that is the future. And that is, again, this notion of audio, both for the consumer, which really is owned by Spotify at the moment, and business, which is owned by Soundtrack Your Brand.
You kind of hinted at, the audio experience here. So far, we've really only talked about music, but it's a lot more to it than that. There's podcasts, which Spotify talks about a lot. They spent a lot of money expanding into podcasts. You get apps like Clubhouse, which is, audio, or Twitter Moments, which is like the same thing as Clubhouse, as far as I can see. Is that? Can you speak more about the audio experience? Maybe put music to the side for a second. Like how big of a part of the pie is like the other audio stuff, the non-music audio stuff?
I think it could be as big. I mean, again, if you look at what's going on with the Spotify play, right? And again, just look at how the stock's performing today, off of the announcement that they had this afternoon. I think it could be even bigger. And I think that if you really start to use your imagination, you can start to understand where this thing can actually go, which is why I wanted to talk about it with you today. I thought it was just a great example. And there's lots of proof source today in the stock market itself with companies in this space that are doing exactly what you and I are talking about right now, and the end consumer or the investing public is liking it. But yeah, I think there's all kinds of different things. I mean, you have Clubhouse, which could be massive, or something like Clubhouse. Sonos. I think that's another really interesting company that's doing some interesting things with music. So, they have their speaker systems, right? Well, why if I go to Best Buy and I buy Sonos, and I buy that and I'm setting it up, and all of a sudden I have the ability to automatically, sign into Spotify because I want to have that system be able to stream my music. If I buy Sonos for my business, there is a deal with Soundtrack Your Brand today where I can just go in and sign up for Soundtrack Your Brand simply because I bought Sonos. That's an interesting play. If you start thinking about like Zoom, I mean, Zoom has been huge in this last year, but you start to think about what Zoom is going to need to do to iterate and continue to be interesting to the investing public. And if I'm sitting in a room waiting for a meeting to start and I'm playing music, I got to be paying for that music, my friend. And guess where I'm going to go? I'm going to go probably to the largest library in the world, which is Soundtrack Your Brand. There's 51 million songs. And if you look at the data, that's another one of the things that consumers are wanting. They want access. I want access to more music than I can possibly get access to. I don't want to own it. I don't want to store it. I just want to use it when I want to use it, the way I want to use it. So I think that is an interesting thing. Start thinking about Microsoft. Let's bring back one of the old school companies. You don't really, we don't get super excited about it on a daily basis. But there's all kinds of things that Microsoft can start doing with music, and it's going to play into the hands of these publishers and these artists. Hopefully, the artists, we got to really start working on that piece, and also these platforms. I think if you start thinking about it from like the ripple effects, it's significant marketplace.
So who holds the cards here exactly? Is it the artists, the creatives? Is it the people with the libraries? Is it the platforms that have the reach? Is it all of them? Is it none of them?
I love that question, Spencer. That is a really good question. And the answer to that question is it's the rights holders. They hold the cards. So if you think about it, if you don't have universal music, we talked about it a few minutes ago, right? There's 69% of every stream that hits on a daily basis is coming from the Frontline Library or Universal Music. So if you don't have universal music in your arsenal, if you will, then you don't have a platform that can compete, right? That's why Spotify is so powerful. They have 51 million songs. But if they didn't have universal, all of a sudden, Spotify isn't Spotify. So they hold the cards. And then I think second in line of these platforms, because the platforms are allowing the music that the owners actually have to distribute to, end consumers worldwide, both emerging markets, domestic markets, et cetera. And then the last, unfortunately, and it makes absolutely no sense, and this is why I think it's going to be a major focus moving forward, the least benefited are the people that are actually writing the music, or the people that are performing the music that makes that music, attractive or popular. It makes absolutely no sense, but that's the way that the music business works right now. And again, I know factually, because I'm very involved in it, that there's significant focus on changing that. And I'm excited about it.
Well, what about like the business models though? Because Spotify is not profitable. I don't know if they care about that right now. I don't know if investors care about that right now because it's still relatively early days. But there has to be a path to profitability eventually. As I understand it, Apple Music operates at a loss, unless I'm wrong. For Apple,
you're not wrong,
right? And same thing with Amazon. So there has to be a path to profitability somewhere eventually, right?
Yeah, and I think that's coming. I again, as a venture capitalist, profitability is not, and I know that sounds crazy, but for these younger companies, it's just really not something that I think is most important. I mean, if we look at Amazon, let's go back to Amazon. In the mid '90s, what did it take? 13 years for Amazon to pull a profit, and that was like pulling hair. Out of Jeff Bezos. He didn't want to do it, but he knew that he had to in order to, meet the expectations of the marketplace, because he was just using his money to continue to buy more and more market share. And he knew if he did that, at the end of the day, his stock would pay off massively for its investors. And I think that, these CEOs of these technology companies are kind of balancing that. I think you're seeing profitability much earlier than you used to. But again, I think that they're being, strategic. I think they're being smart. My humble opinion, I think they're doing the right thing. And, profitability at the end of the day isn't as difficult. I know that sounds crazy, but it's not as difficult as it is absorbing all these market share and, getting these top line numbers as big as they are. Profitability is really about bean counting. And, once you have it all together, you can start to do that. It doesn't take a rocket scientist to get that done. So I've just never been a big, I don't get too worried about that kind of thing.
Fair enough. One company we have not mentioned yet in this half hour is Sirius, which is sort of like the dinosaur in the room, I guess. If Spotify is the gorilla, Sirius is the dinosaur. And I know they bought Pandora right last year or the year prior. Do you know anything about their exposure to, I mean, obviously it's audio, but it's a different kind of audio, and they're sort of trapped into a different business model of terrestrial radio. But they're trying to get off that. Do you have any thoughts on Sirius here?
It's interesting and that's what I love about technology. And I think it's one of the things that all of our listeners have to really hone in on, that we live in a different world. Right. I mean, if you think about, when I think about Sirius, I kind of think what pops into my head is BlackBerry. Right. And if we start to remember what BlackBerry had, I mean, at one time, what did they have? 80% of the marketplace. And, at the snap of a finger, they gave it all up, because they weren't looking, they kept their competitors they had in their line of sight were the traditional competitors. And they had no idea that this computer hardware, company that actually nobody was even paying attention to at the time was going to come in and wipe them out. And that's kind of how I feel about Sirius, right? They had the ability to own this market and keep this market, but they stopped iterating, they stopped doing interesting things. And the technology, the creators around the world who are creating, products to disrupt and make it more attractive and more aligned to how consumers really want to consume, came in and popped it away from them. So you used the word dinosaur. That was your word, my friend, and I'm going to stick with that. I'm going to run with that because I think it's the proper word to use.
I'll own it. If they want to come after me, they can.
It's just your opinion.
They can call into my show like a radio and come after me. All right, here's a question that I was going to get to later, but I might as well get to it now because it's somebody brought it up in the chat. NCAL mentioned the magic letters NFTs. Now, this NFTs was kind of when this whole thing first came about, even a couple of years ago, the first use case people always talked about was artists. It's good for artists, right? It'll give them ownership of their products down the line. Is there an NFT play here in the music streaming world?
Yeah, I think you're seeing it now, right? I think, the original mindset for it, I think you're starting to see it. Look at what's happening in the private equity space, not venture capital, but private equity. You see a lot of private equity firms now going in and buying up artists, playlists. It's a big, big thing right now. And again, that's more proof source to our conversation today, right? That, obviously investors are wanting the ownership of that music. But I think that it's interesting, right? Because you can offer that up and people can own a piece of your library or own a piece of your merchandising or own a piece of your, concert revenue moving forward. I mean, I have some friends in the music space, very well-known artists, worldwide, artists. And, we're playing around with a lot of different ideas around this concept and what it might end up looking like. I actually think it's very interesting. And I think that it's definitely going to play a part of this whole game over the next 9 years.
So another trend that I'm sure you've observed in the last couple of months has been famous artists like selling their entire back catalog. Right, I think Bob Dylan did it.
Yep.
A few others that have Stevie Nicks, I believe. Why are they doing that? And what are the implications of this for all the players we just got done discussing?
Well, I think the reason for it, right? So if you, was it Michael Jackson that owned the Beatles, right? Think about that for a minute.
Did he really?
So, oh yeah, that's a fact, right? Michael Jackson owned all of the music for the Beatles. So again, it goes back to understanding this business model. You asked me a question. It was a great question. Who's championing all of this? Who's in control? And I said, it's the people who own the music. So if you are going in and buying this music, you're going to you're going to be able to play in this game in a significant way over the next 9 years. Now, how does that segue to the artists themselves? Well, if you're Stevie Nicks, right? If you're Bob Dylan, you're probably at an age where, spending, 9 months out of a 12-month year on the road, living out of a van, it's very difficult. As I said, I've got friends in this business. It's not an easy thing to do. So if I can sell my music and I can round up enough money where I really don't need to worry about another damn thing for the rest of my life or the rest of my children's life, that's a pretty good deal. Why not do that?
Let's talk about the downside and maybe the bear case here and risk factors to this entire industry. What is the biggest risk factor? We'll start there.
Yeah, I think that the biggest risk factor is what if the rights holders decide that these platforms aren't the way to go, right? That's a big risk. As I said earlier, if Universal decides to no longer work with Spotify, Spotify's a very different business than it is today. It's another reason why you're probably seeing Spotify diversify like they are, right? They don't want to have all of their eggs in one basket. And I think that makes a lot of sense. But I think that that's really the biggest risk. But outside of that, Spencer, more and more people on a daily basis are picking up smartphones. And it's running our lives. And statistically speaking and data speaking, the moment that I buy a smartphone, I'm going to start streaming music. And if you start looking at the emerging markets and what's happening with the smartphone, you can start to see just how powerful this music streaming and the growth of this music streaming can be. That's why I say I believe you could see 22% annual growth rates in the streaming just from this, right? So I don't see a lot of downside right now. I think the downside we already went through about a decade ago, and now we're coming out of that, and we're gonna have a nice run here for a long period of time.
What about as far as the platforms, though? The case that it's really not that different from what the streaming services are having to fight over right now, right? Netflix versus HBO Max versus Peacock, and they're all just fighting for the same IP, right? And they're all just divvying it up, and there's going to be there's no one clear winner. There's this platform has these rights. These songs aren't on this platform. Who was it? Taylor Swift that blocked. I think she's on Spotify now, but she wasn't on Spotify for the longest time. what do you make of that as a risk for platforms? Is people are going to go to where their music is, similar to how people go to different streaming platforms for where their shows are?
Yeah, I think it's a solid question. And, look, I have a belief system that competition is good for business. So, your point is, look, if I'm using Apple, what is really the big difference between Apple and Spotify? And therefore, is there risk there? And you also, rightfully so, brought up Sirius, which, is a Pandora play. Pandora was there long before Apple Music was there. Pandora was there long before Spotify was there. So what happened? And it's really what I'm going into, right? It's this notion of audio. And that's what I really want all of our listeners to think about. It's not just a music play. It's the play of audio. Yeah. It's what else can happen here. And I think that the winner of this, or let's just say the 1,000-pound gorilla, if we continue to label them that way, the king of the hill, however, whatever you want to say, but the winner of the game, and there are gonna be other players in the market. We want there to be other players in the market as consumers. Otherwise, things just get way too expensive, and we don't get to consume things the way that we want to. There'll be players, but I think the 1,000-pound gorilla is going to go to those companies that have the ability to continue to expand their value proposition. And I think Spotify right now on the B2C side is doing a brilliant job of execution on that. They're bringing in the podcasts. To sign Joe Rogan was a momentous event for that organization. The things that you see today around Locker Room, I think, are just the beginning of an interesting technology play around sports. I mean, sports is a big thing for consumers. And now to be able to, absorb that and consume that in a different way on Spotify is very interesting. And by the way, I'm only paying $9.99 a month for it, right? So this isn't something that I'm paying significant amount of money for. And I've already stated I'm willing to pay up to $162 a year. I'm paying $9.99 and I can get all these things done. So again, it's going to boil down to those players who can continue to grow the value proposition, either on the B2B side or the B2C side, like Spotify is with audio. And on the B2B side, I think is really interesting, because I think there's so many things that can be done on the global business audio side of the play. And I think that these big B2C organizations are perfect acquisition targets for me, or the public market on a standalone.
I know we're talking about streaming, and streaming is different than ownership. But that being said, it is still pretty easy to pirate music. I would think that would be a pretty big risk factor. No?
It depends on how you look at it, Spencer. So yeah, you can pirate it, but do you really want to take the time and the energy to do all that crap when it's just costing you $9.99? I mean, good Lord, you can't even take an Uber, a mile and pay less than $9.99. So, I mean, if you want to pirate it, yeah, you can do that. But I don't think that's not going to scale, right? I mean, I think that they've got the pricing it to a point where that is not a blocker whatsoever. And unless you enjoy it, I mean, if you enjoy it, God bless you, have fun. But to me, it makes no sense.
And then I'm wondering just about like demographics here. So obviously, millennials and Gen Z are much more likely to be on these platforms than the older generations are. But I'm wondering if everyone is being conditioned for this new subscription model, or recurring revenue model, where they don't own anything. They're just paying for a subscription for access to a catalog of songs. I'm wondering what like the long-term implications of that are, similar to how like older generations are all about like ownership and wanting to own, like, be it physical or digitally, having ownership of a song or of an audio experience, whatever you want to call it. And then newer generations are not being conditioned in that way. They're more so just content to pay $9.99 a month and get access to a catalog, not actually own it, but just would it be at the mercy of Spotify, more or less. I'm wondering if there are any like implications to that business model like down the road.
If I'm following you on that, I think what you're trying to say is just from a generational perspective. Here we are in 2021, and you're right. Nobody really wants to own music anymore because it costs you money to have a larger hard drive, right, to store it. You use it for a week to 2 weeks, and you get sick of it, and you want to do something else. So I really don't think that there are long-term implications to the current way that we are consuming music, or let's say consuming the audio experience. I don't think that that's going to go away. Now, I just talked about it earlier, right? With BlackBerry and with Pandora. You always got to keep your eyes out. And the most amazing thing about the world that we live in today is, some of this stuff you can't even make it up, right? It just comes out of nowhere. So who knows? But I really do believe. Obviously, I've put millions of dollars to back up this statement. I think that how it's currently being set up is proper. And you did talk about, though, the different segments and the different groups. One interesting thing is if you look at Universal, which again, they have 69% of the market. Their biggest play is in the R&B side, right? Their biggest artists are Cardi B. Their biggest artist is Drake. That's where the majority of their revenue is coming from, is that R&B platform. And the Black community actually spends more money on music than the rest of the demographics. I think it's $173, $174 a year that they spend in music. So there are different demographics. And again, I think that these platforms and these owners, they understand the data. Beautiful thing about technology today, we have all the data. We understand how end consumers want our stuff, and shame on us if we don't give it to them the way that they want to.
Yeah, well, I mean, on the data front, the Spotify algorithm is legendary, right? It's unbelievable how accurate that thing is. And one thing we touched on early on, but we sort of forgot about, or I want to come back to, is the live aspect of this, right? You sort of hit on that, and the recovery and in I guess supply and demand, whatever you want to call it, from the pandemic and the return of live. That's probably going to factor into this, and also on the NFT side too. I'm sort of excited for the possibilities of, like, I don't know, if you can make an NFT of a sports highlight, like why can't you make an NFT of a concert, right?
You absolutely will.
It's the same.
You absolutely will. You're spot on it. You absolutely will. And I don't know what you and I kind of talked about this a couple of weeks ago, and we used Miami as an example. But I really do believe we have a renaissance that is coming. It's the Roaring '20s. It's going to be a party like we have not ever seen in our lifetime and never will again. And I think the NFT on concerts is absolutely going to be there's no damn question about it. Festivals, you'll see it in festivals. There's actually and it goes back to what we're talking about here, right? So we're talking about this major theme for the public markets, which is an investable theme that we all want to lean into for the next 9 years. There's lots of growth opportunity there, but thinking about how does it parlay into the private markets, and how do we think about this as investors? There's a cool little company out of Miami, Florida, believe it or not, called Unity, and Unity is a music app. You can go to your app store and actually download it, Unity, and what they do is they give fans of music the ability to have access to these festivals and these concerts. And the more you use music, so let's say, for example, we were talking about Drake earlier. Let's just use him. So if I play or stream Drake for X amount of hours during the day, I build up what this music currency that they call karma, and that karma is a wallet. It's a digital wallet. And when Drake comes to Miami and he's going to perform at the American Airlines Arena, I can go in and I can get backstage passes, for example, and I can spend my karma that I, created on the app to get back there. If I have enough karma, maybe I can get in the green room. If I have enough karma, maybe I can hang out with him for a while. And if I go to a festival, I can get discounts, I can get free drinks, I can get free food at different locations. And it's all about, connecting the fan base of these artists in a community. So let's say that you're a fan of Drake, and Drake comes out with a new song, and I send it to you, and I say, Spencer, you got to download this, you got to stream this, you're going to love it. and the moment that you stream it, I earn karma for that. So it's an interesting company. I think that they're doing interesting things. Very early company. So again, you're getting in the early stages of the life cycle where, the majority of the creation of the wealth is made, and eventually somebody's going to buy it, and it'll be a public company that you and I are talking about, in a year or two.
But just to kind of connect the dots here, do you see a future in which companies like Spotify, Apple, whether it's via Apple Music or something else, or Warner Media, Tencent, do you see a future where these are all also NFT plays?
I definitely think that those companies are going to have to think about the NFT. Absolutely. It's a part. It makes sense. I think it's going to be a part of the future. I think it'll be slow moving for these bigger companies, but eventually, they're going to experiment. They're going to do things to experiment and to iterate and to try it out. And I do think that all of those companies will have a play in it. I do.
Just to be clear, that company you mentioned, Unitia, right? I'm going to put it.
Yep.
I'll put it up on the screen right now so y'all can see. It's not Unity. It's Unity, but it's like spelled like
with
that.
An A. Yep, you got it, brother. There it is.
With an A, not Unity with the Y. Not Unity Software, ticker U. It's a different company. Yeah. Unity, UNITEA is a company that Jeff was referring to. What are there any like music focused SPACs out there? And I'm just curious if you've seen any of that lying around.
So, the whole SPAC conversation right now is interesting. And you and I talked about it a couple of weeks ago. And I actually mentioned on the show that I thought that, tech managers or tech sponsors that were focused on SPAC sponsors that were focused on technology, to me, isn't interesting, right? So I'm gonna take a little bit longer to answer this question.
Okay.
If you think about Amazon and you think about Uber, we talked about it a couple of weeks ago. In 1997, when Amazon went public, it was private for about 3 years. Top line revenue about $1.3 million, and you and I were able to participate in the growth of that company in the public market. The wealth generation was created in the public market. Now, if you connect the dots, fast forward to 2019 when Uber went public. Uber had been around for 11 years. Top line revenue in the billions. And the fact of the matter is the wealth generation was created in the private sector so far. So, if you pull all of that together, ask me the question again because I forgot it.
Are there any SPACs that you know of?
Yes.
And actually, there is one that my boy Chris, our SPAC expert, just dropped for me. But I'll let you go, and then I'll go to that. Yeah.
So where I was going with that whole thing is what I like about the SPACs is it allows us to invest in these tech companies and ride the wave of growth. Okay. And so that's what I like about them. So when you say, are there SPAC companies that are focused on music? There are. You're going to talk about one in just a second. And there are more coming, I know, factually, because some of the companies that I own in the private sector are currently having conversations with SPAC sponsors. So they are coming out, and I do think that those are interesting plays.
So Chris Cacci, the man is on the ball as always. He said, Spencer, what are you doing? ROCC, come on now, Roth acquisition. I guess they're rumored to be they're in talks to go public via. I'm sorry, they're in talks to buy Reservoir Media, which goes back to what you were saying earlier, Jeff. On the they're on the catalog side, right? So
yeah.
They've got 26,000 masters, 130,000 copyrights from everybody from 2 Chainz to Sheryl Crow, John Denver. To name a few. So this just goes into what you were saying before, as there is a lot of the supply on the private side, not a lot of supply on the public side, but it's going to be coming down the pipe.
Yeah, and Spencer, I love this. I mean, this right here to me is exactly what you and I have been talking about. And for all of our listeners, this is an incredible way for our listeners to play in this theme that you and I have just spent the last 45 minutes outlining.
Yeah.
If that is true, that they're going to acquire them, this is an incredible, I'm going to say relatively cheap. I personally think, it's going to come in at $10 a share, right? That's what a SPAC has to roll in at. So, to be able to buy that and have a piece of that library and have a play in this space, when we all know, if you and I are right, after everything that we've just done outlining is correct, what an incredible way to ride that train of growth from $10 to God knows where it's going to go. I mean, look at where Warner Brothers is today. Look at where Universal is today. Look at where Sony is today. Those are much higher, priced strike prices, and we can come in at $10. I love it. This is exactly why I love specs. Proper specs, the right specs.
the right specs. Yeah, maybe. Specs buying it at a reasonable, not insane valuations.
Correct.
Couple questions from our chat, and again, ROCC was the ticker there, and nothing confirmed, just reported that they're in talks.
Yeah.
Couple questions from our chat. Of all the companies that we've mentioned, and maybe other ones we haven't, do you see any of these companies being acquisition targets in the future? Maybe like I do. And I think that's one of the things, again, for our listeners who are accredited and can play in the private equity space. I definitely think that Soundtrack Your Brand is an acquisition target. I wouldn't have invested in it if it wasn't. I also think that it can ride its own horse into the public markets if it wants to. But I definitely think that big market B2C players who are needing, Spencer, you talked about it. How do we get to profitability? Well, one of the things you can do and get into profitability is acquire a company has significant market share in a business model that is more profitable than the one that you're in. Let me give you an idea. If right now there are about 10 million streams that play inside of business environments through Spotify, through the business to consumer platform, which we know it's illegal, right? So if Spotify were to take those 10 million customers and move them over to Soundtrack Your Brand as an example, Spotify would make almost 5 times more money off of those 10 million subscribers than they do their own platform. So when you start to think about all this stuff, I think it makes a hell of a lot of sense. A Soundtrack Your Brand would be a perfect acquisition target for a major corporation. And then I would want all of our listeners to be thinking about just anything that has anything to do with audio or something that could use audio. We talked about Zoom. What can Zoom acquire to improve upon its value proposition? You and I also talked about that. How do we continue to make sure that we're competitive? How do we continue to make sure that our consumers are wanting our product and it just doesn't become, this commoditized experience where, it's just a music play on Apple and a music play on Spotify. That is, they have to be competitive. There's going to be more. So what can those companies be, possibly buying and lean into that private market? Try to figure out, is there, if you're not accredited, is there a way? Is there, growth funding or anything like that might be happening online? If you are accredited, who do you know who knows someone that can get you, a phone conversation or a text message with a venture capitalist and can give you access to it. I mean, I think what you and I are doing here to connect the dots is we're identifying investable themes. We're laying out the foundation of why it makes sense. And then what we're also saying is, look, here are these downstream companies that could be acquired, or these downstream companies that can make their way to the big show themselves. And I think it's really interesting if people are listening to it. I swear, I just had a question for you, and it just left my brain, unfortunately.
Well, you and I are on the same page today because I just left my brain about 5 minutes ago.
No. I was gonna say, speaking for myself, on the podcast front, I mean, I'm super bullish. That's the same audio sphere, and I'm just so bullish on podcasts. And we've seen only in the last, I would say, 5 years have you seen what I would call mainstream adoption of podcasts. The earliest podcasts are by now are like 20 years old, but only in the last 5 or 6 years have you seen the real mainstream adoption, and that's thanks in part to platforms like Spotify and Apple Music that facilitate that. But the supply is just going through the roof. Demand, I think, is even keeping pace which is unbelievable. You're seeing these, it's a grab bag for a talent now. You see companies like Spotify, like you mentioned, striking the deal with Joe Rogan and the Ringer, Spotify spent what $300 million to buy the Ringer, mostly for their podcast assets. To be honest, so there is big money flying around, which is right. on the podcast front, which I'm super bullish. Just from like a consumer standpoint on podcasts there. So for that reason and that reason alone, I'm interested. But just to sort of recap this, Jeff, before we hop off here, someone asked if there were any, public companies, and we spent the entire time talking about this, but just to recap, you like Spotify, you like Apple for Apple Music, you like Warner Media. Can you just go through that list again?
Yeah, I'm a big buyer of Spotify whenever you can get it on a down. I mean, I think today is just another example. And again, I think you and I have done a great job today of highlighting where these things can go. And I think today is proof source, right? Just one acquisition of Betty Labs and the damn thing, I don't know how many companies are up 5% today, but you've got the view on that. But it's a damn good company, I think that they're going to continue to own the space. If you're a fan of Apple, I mean, we all more than likely have these things in our hands. I think you can buy Apple. And again, I think music is going to continue to have to help Apple. It's obviously not the big play there. It's not what they focused all of their attention on, which I think is something for us as investors to think about. I mentioned Amazon earlier. Just I think the competitive nature of that company. They just don't like to be number 3 or 4 in anything. They're in the space, and I think you're going to continue to see them do some things. I like Warner. I think they're the third largest of the players, and again, it's a competitive world. I think they're doing some interesting things. What they did today and what they announced today with Tencent, I think, is going to play huge dividends for that particular company moving forward. I like things like Sonos. It's hardware. You don't have the margins that you have in the technology plays, but I think that it's interesting, and I like how they're bundling that value play for their customers. So I like that. And I think that's really kind of lines it up right there.
Yeah, as we said, there's not a ton of names in the capital markets, but as Jeff has said, he thinks that could change in the next decade or so, as the supply of private companies go public, whether it's via SPAC or IPO or in the case of Spotify, direct listing. Guys, if you liked this idea of doing a deep dive on one specific thing, and you have other ideas for Jeff and I to discuss, email us. Email powerhour@benzinga.com. We talked about Soundtrack Your Brand, which is one of Jeff's companies, but he's got a lot of companies. He's got a lot of thoughts on a lot of different spaces. This was just one of them. And so we are open to your ideas. But Jeff Ransdell, thank you very much. As we mentioned, I've put his handle up on the screen several times here throughout the hour. He's the founding partner and managing director of Fuel Venture Capital, at Jeff Ransdell VC, at Fuel VC on Instagram, on Twitter, and I think I got all of it. Jeff, this has been fun. We never do deep dives like this, and yeah, I would like to do it more. And I hope I answered most of your questions from a chat. Again, email us with any more ideas for deep dives on a specific theme, emerging market, technology, whatever you want to discuss. And if Jeff has thoughts, then we'll do it, I think, next time.
Spencer, it's always good to spend time with you, my friend, and I enjoyed the conversation. And you have a legendary day, and you finish strong. We'll see you in a couple of weeks.
Stay legendary, Jeff. Have a legendary day. You as well.
Ciao, brother.
All right. Again, guys, smash the like button for Jeff Ransdell. Different show we're doing here. A little bit different than the rest of our content. Not so much focused on the stocks or the charts, but doing a deep dive on one specific niche area. I thought that was great, and I hope you did as well.